Hello and welcome to another Sourced Property podcast. This week we have the head of support at Sourced Franchise, Pete Blackley, with us. Pete, do you want to say hello?
Hi guys, I'm Pete, as Chris rightly said, the head of support here at Sourced. I look after the support team, who then go out and look after and mentor the franchisees.
So let's do a bit of a date check, actually. This is November 2022, and over the past couple of months you'll have probably seen quite a lot of headlines in property about landlords giving up their portfolios, selling off their portfolios because they want to move on, they want to do something else because they're not making enough money. So we thought we'd do a podcast exploring that in a bit more detail because, Pete, you have quite an extensive portfolio, don't you, Pete?
I do, yes.
Do you want to tell us how many properties are in your portfolio?
No, Chris, I would not like to tell you that, but I'm constantly acquiring properties. I've been in a buy-to-let landlord, portfolio landlord, if you will, for about 10 years now, so this very much does apply to me, the talking point.
So we have a bit of a running joke at Sourced because Pete will not tell us how many properties he's got in his portfolio. However, we know that 2 years ago, Pete's goal in property was to buy one property per month. Pete's goal last year was to buy one property every 2 weeks. And Pete's goal this year has been to buy one property every week. So there's quite a few properties knocking around. I think in terms of managing tenants, managing properties and making sure that you have a financial return from your properties, you're quite well positioned to have this conversation, definitely. Right? So that's a bit of an in-joke at Source. So if ever you see Pete, please ask him that question. I'm sure that he's going to slip up one day and he's actually going to tell us how many properties he owns overall. In fact, in terms of ambition as well, do you want to tell us what your sort of longer term ambition is with property?
Yeah, world domination, essentially. So my long-term ambition in property is to eventually pass it down to the kids and the grandkids and for them to keep growing the portfolio. So as it's structured at the minute, when my son turns 21, my entire portfolio will be paid off, and then it's then up to him to come on as a director to the various SPVs and businesses, and for him to then remortgage it and quadruple it from there, and so on and so forth.
And one of the reasons that we employed Pete is because, like us at Sourced, he's been growing his portfolio on this, away from Sourced, with nothing to do with Sourced, but the way that he looks at the portfolio, the way that he's solutions orientated is very, very similar to the values and beliefs that we have here. Therefore, looking at all the media speculation, is buy-to-let dead? How many times have you seen that over the last couple of months? Pete is in a good position to have this conversation. So let's talk about that, first of all. Let's talk about media reporting that buy-to-let is dead. And let's just go over your portfolio. Your portfolio is mainly buy-to-lets or HMOs, right?
It is, yeah.
Yeah. So what is your take on buy-to-let is dead?
It's not dead, the podcast over. So it's just what I would like to call media noise. So anytime there's a downturn, anytime interest rates rise, tenants are struggling, people are struggling with the bills, etc. Landlords are always an easy scapegoat, and you will always be told by the media to sell it because they do have a little bit of a bias against private landlords, or quite a big bias against it. So yeah, there will be landlords out there who've gone from 2% to 5% with their interest rates and will be struggling. Because they can't put the rents up, they're over leveraged, but the vast majority of landlords have seen this coming for a long time that I've spoken to, certainly, and the franchisees here as well, because we constantly give economic updates on it. So there will be some people struggling. I've no doubt about that, I don't doubt that at all, but it's not quite the widespread misery that the media is trying to portray it as.
And the situation, would you agree with this? The situation that we're currently in, rents have risen over the last couple of months. But property prices have been rising for a good couple of years now. Since the start of COVID, really, is when they really started to ramp up. So the property prices start to increase rapidly, but rents stay the same. Therefore, when you're calculating the yield that you're going to generate from a property, if your rent stays the same, but the price goes up, your yield gets worse. So that was the first trigger, I would say, for the media to say, look, buy-to-let is dead. Then you add in the increase in interest rates that we've had because the Bank of England have put up interest rates to deal with inflation.
They have, yeah.
And now let's take that example of 2%, 2% being charged on your mortgage, rising to 5% being charged on your mortgage. At 2% to 5%, the difference on a £150,000 house is £181 per month. Now, I have done buy-to-let. I currently don't have buy-to-lets. I have different kinds of property investments. But when I had buy-to-lets, I was only making 150, 160 quid per month on each one of them. So you put up the rent on each one of them by £180. That's why they're making the judgment that buy-to-let is dead.
It is, because they're looking at the average and they're not looking at the outliers. They're not looking at the portfolio landlords who can reach an optimum level and systemise and pay in bulk essentially for goods and services and reduce the cost that way. And they're not looking at taking into account the vast majority of pension holders who I would overwhelmingly say have owned them outright, have got no mortgage on them, and then other kind of part-time buy-to-let landlords that might have one or two that remortgage their own home, so therefore it is owned outright and that debt's substantially lower, or they've risen in value and they're on 50-60% loan to value mortgages.
And also, and I think most critically, that argument is absolutely relevant at the time where property prices rise, but rental prices have yet to rise, because rental prices usually follow property prices with a bit of a lag. So we're at the position now where a lot of the headlines are all about capping rental increases, and charities like Shelter campaigning to make sure that people can still afford their rental prices. So we're at the position now where the rental prices are starting to increase in line, or to get themselves back in line with the price increases that we've seen over the past 3 years. So first and foremost, it's worth bearing in mind that rental prices are increasing right now. And so if you're looking at buy-to-let, okay, right now, the property might not make as much sense as you want it to. However, if rental prices continue to increase and be in line with those price increases from the property, then you're going to be back at roughly the same rates as you were previously, right?
It's short-term paying for long-term gain, and it is a long-term investment. So you can have a look. We're going to have probably, I would say, I guess, I've got no crystal ball, we're probably going to have 2 years of pain, 2 years of high interest rates, 2 years of high debt costs, high gas and electric prices, unable to increase the rents as much as we want to because there's a real term fall in people's incomes. But over the 25-year period, it's just going to be a blink of the eye, and it's not going to be something that you're really going to look back on in 5-10 years' time when your property has potentially doubled in value and your rental income has increased significantly. I'll take a quick example. Before the pandemic, all my HMO rooms pretty much all rented out at £350 per calendar month. They're now all rented out at £500 per calendar month. Yes, the costs have increased, but my net profit has also increased because the costs haven't increased as much as I've put the rent up by. So there is scope to put the rent up depending on the makeup of the portfolio as well.
And I think when you're looking at the overall performance of the property market, if you're looking at it as an investment, there are very few people out there that are currently buying investment properties anymore because they can't get the lending, they don't have the necessary cash, whatever the reason might be. Therefore, there are fewer buyers in the market. Therefore, you're more likely to be able to find yourself a deal that you can hold over a long period of time and make that return from. You're more likely to get a 40% discount now than you were 6, 12, 18, 24 months ago.
And if you get the mortgage for less, guess what goes down? Your mortgage repayments, but your rental income will very much stay the same for that particular property. So, quick example, if you were to buy property 6 months ago, 150,000, mortgage rates have increased, but today you buy it at 110, 120, and the rents have stayed the same, you're still pretty much going to be netting the same kind of income each month because you bought it for substantially less. And then the added bonus, a few years down the line, when all this blows over, when all this noise is gone, you've got a property with some equity in that you can refinance out.
So it seems like the media has got this immediate reaction to something. The immediate reaction is that buy-to-let is dead, and when you take that snapshot, you can understand why they're coming at it from that angle. Yet, when you put everything together and you look at the overall scope, it's actually a great opportunity for you to now buy property, to now increase your portfolio than it had been.
Shortage. There wasn't a petrol shortage until the media told you there was a petrol shortage, and then what did you do? You went out and bought petrol and created a shortage.
So looking at this in its most straightforward way, why are there so many headlines saying that people are that landlords are selling up? Why don't the landlords just increase the rent?
It's difficult to. It's like everything. It's like Tesco's or Greggs or any other kind of service provider, there's only a limit to what people can afford. So yes, your costs might have increased, but there's only so much that your customers can afford. So let's take an example of a sausage roll. Say you sell it for £1 and your costs were 70p. Before they've now gone up to £1, you can't exactly increase it by 30p. You might only increase it by 10, 20p and take a little bit of a loss on it. So the same with landlords. So people can only afford what they can afford, unfortunately. So there's a lot of people out there that are struggling. We're not the only ones facing challenges with higher interest rates. People have higher interest rates on their credit cards, the unsecured debt, the car loans, etc. They're not seeing their wages increase in line with inflation. The cost of everything is going up. So there's only so much that essentially you can squeeze people further to the point where they'll just say, right, well, we'll go and move to a town that's cheaper, or we'll go find another landlord elsewhere, or we'll just stop paying our rent and sit here for a few months.
And I would also argue that a lot of landlords out there, and I think the landlords that are the most likely to sell up are the ones that are not running it as a business.
Oh, yeah.
They might be accidental landlords. They might be, they might be doing it as just like a bit of fun. But because it is difficult to increase the rent, because it's a process that you need to understand. There's a legal process that you need to go down, which we'll talk about in a little while. But because of that, they think, well, I don't want to learn about that. It's not my thing. I'm too busy over here to put my time and energy into that over there. Therefore, I'm just going to sell up. Now, there are going to be a few of those people around, and that seems to be where the media get hold of that kind of story.
You've touched on there, it's the emotive response to it. So these people are too emotionally involved in their business, and property is a business. People talk to you about it being passive income or a side hustle or something in addition, but you can do it in addition to a full-time job like I do. But it is a business, and you need to run it as a business. And it's those same kind of people there that will get this emotive response. They'll read all these scare stories and horror stories in the media, and then they will sell up, or they won't increase their rents, or they'll try and remortgage, and they'll do something. So it's the media perpetuating that cycle. There's only a crash because the media tells you there's going to be a crash, and you start offering less on houses, and vendors start putting their properties on for less, and then surveyors get scared, and it creates that downward cycle.
So talking about the way that landlords can increase the rent, what are the things that you've done with your portfolio to increase the rent? You mentioned the HMO from 350 to 500. So how did you go about that?
Yeah, so I'll take two HMOs there. So there's a video that you guys can see that will be on our YouTube channel shortly, and the day in the life of a landlord. I went and refurbed one of my HMOs. So we'd evicted the tenants. One of the tenants hadn't been paying me for a long time, and the other tenants left because he forced them out, so we removed him. The rents there are always traditionally $350 per kind of month, so I put new carpets in, new bathroom, painted, decorated, new furniture, a couple of new doors, things like that, and that's how we justified that rent increase. The property was a bit tired. I'd owned it for about 9 years, and we refurbed it that way. The other way, the HMO, the other one I'd owned for maybe 5 or 6 years, probably not even that. We had the group of tenants moved out, so I advertised it on the market. The market rent then was £500 per calendar month, so I put them up to £500 per calendar month. The other tenants, they've had incremental increases of 10% over the last 3 years to take them from 350 to what they are now.
You know what, you've just reminded me, I do have a portfolio of buy-to-lets that are currently run, and that's exactly what we're doing as well. I don't actually get involved in the day-to-day running of those properties in the way that you do with your properties, but that's the exact instruction that we've given to the agent, that at the moment we don't want to put the rent up for the people that are in the properties. However, as soon as somebody moves out, we start to charge market rent. And it's a really simple way to do it. However, if you've got somebody in one of your properties that's more of a long-term tenant, there are still things that you can do, aren't there? So let's look at those solutions. So if you've got a long-term tenant, the first thing, and probably the most important thing that you can do, is make sure that your tenancy agreement allows you to review the rent on a regular basis. So you can do this, or you can increase the rent up to once per year. You wouldn't really need to do it more than that, but once per year you can increase the rent.
Unfair to do that, isn't it? Create uncertainty for the tenant.
The tenant's not going to be happy, surely, if you continue to put the rent up. So that's something that you can do. What else is out there that you can do in order to increase the rent for a tenant who's been with you for a while?
Yeah, so you can serve a Section 13 notice, but that's not during the fixed term, and again, that can only be once per year. And you also need to give them at least one full calendar month's notice before that increase takes effect.
You could actually serve a Section 13 during a fixed term notice, but it can't come into effect until after the fixed term notice. So you can pre-warn them. And again, if you've got a good, or if you're aiming to have a good relationship with your tenant, then you might want to do that to give them as much notice as possible so they can prepare for that financial commitment that they're going to have to make.
On something there as well, tenants don't want to be made homeless, and if you are struggling with your mortgage repayments because the rent is low, have the conversation with your tenant. Say, look, my costs have increased significantly. I'm going to have to increase your rent to market rate. They'll look out there. They'll see that other properties are either at that price or are more expensive, and they'll probably do a quick calculation in their head that's going to cost about $1,500 to $2,000 to move elsewhere in rent and deposits, and then they've got the moving van, and they've got the hassle of upheaval of the kids packing up, etc., etc. And if you're just asking for a couple of £100 rent increase for them, that's actually a saving for them over a 12-month period potentially. So I have had conversations with tenants that say, look, our costs have increased. This is what we're going to have to put the property up to. Go away, have a think about it, look at what else is on there. And 9 times out of 10, they just come back and accept it because they accept the fact that it's going to cost them substantially more to move to another part of the country potentially.
So there are 3 main ways that we've shown you that you can manage the rent and manage the rental increases during the term of a tenancy. First way, make sure it's written in the contract. A rent review is in the contract. And ideally, you'd have a rental review every year. Obviously, that's up for negotiation before the tenant signs that contract. You can only do that increase once per year, though. And then you'd have a Section 13. You'd serve a Section 13 to your tenant. And that Section 13, again, you can only do that once per year, but that tells the tenant, it gives them at least a month's notice, and it tells the tenant what that rental increase is going to be. So this has sort of sparked something in me. I think we should do a podcast about why now is the right time to buy property, actually, thinking about it, right? Because we at Sourced, we have a portfolio. We are increasing that portfolio right now. We're increasing it quite aggressively because we see now as a great opportunity that in 10 years' time, people are going to talk about 2022, 2023.
Yeah, in the same way they spoke about 2008.
Exactly. And they're going to talk about the massive discounts they got on property. Well, that's happening right now. So maybe we should do a podcast about exactly that. And then the other way that we mentioned that you can increase the rent is obviously when the tenant leaves and you start to advertise that property again. So hopefully if you are a landlord or you're thinking about being a landlord, you've got some really useful advice there to put into place to manage that rental income that you're making, and not just listening to the media, because it's a very blinkered view of what's happening right now. So thanks very much for listening to the Source Property Podcast. Remember, Source Franchise is here to help you. We are the first and only franchise of our kind, and we are much, much more than just a training course. We're right behind you, supplying you with knowledge, property leads, and we can even offer you funding through Source Capital. To find out more, send us an email or download our prospectus at sourcedfranchise.co. Where would they send an email to? franchise@source.co, I would imagine. That's where you should send an email. It'd be good to hear from you. Thanks for listening.